Good morning, Jason Sen from daytradeideas.com. It is Thursday, the 5th of November. We're looking at gold. Big move yesterday. This is a daily chart of gold. You can see we've been in a bear trend now for about 2 years, but the most recent leg lower started around September. You can see the peak here was 28th of August. It was just before the beginning of September. That was the peak, and then we've headed lower ever since. So we've had a good three months or more in this bear trend. Yesterday something quite significant happened. We'd got quite oversold on daily stochastics, but we had been for a couple of weeks, so we weren't paying too much attention to that. But eventually, of course, I suppose we had to have this break higher, and we got it yesterday out of the blue, really. We spiked lower down to 12.11, which had beaten the previous lows for this week at 12.15, but then we suddenly spiked higher in a very good move. Closed well above the previous day's high, and we almost challenged the high on, let me see, that was Tuesday at 12.51. We got as far as 12.50, so very close to that high. So what does that mean? This is quite a good reversal pattern. The big red candle, then the pause followed by the big blue candle, especially as we spiked lower yesterday and closed well above there. So it looks quite positive in the very short term, at least. I'm not saying this is an end of the 2-year bear trend, not by any stretch of the imagination, but in the very, very short term, it's going to allow us more than likely to unwind this oversold daily stochastic. MACD is even about to change positive, so we could see a rally through to next week, perhaps. Where can we get to? Let's have a little look. We'll just close this up a little bit. You can see we've got a trend line here, and try and move this around a little bit. You can see we've got a trend line here at as far as 12.85, so I mean that's a realistic target over the next couple of weeks, but in the very shorter term, 12.64 looks like a reasonable target. We've got a little bit of activity up here around the mid 12.50s, so that would be our target. Who knows, maybe even today we could get as far as the mid 12.50s, but we would eventually be looking for 12.64, which is a Fibonacci retracement target, the first one of the 23.6. We're going to struggle there. Notice how we've got a low down here in this little leg lower at 12.60, so that's sort of 12.61, 12.64 area will probably see us cap at the moment. Who knows, we might see that before the end of the week, but I'll be surprised to see it any higher this week. Just flicking to the shorter term chart, the 4-hour chart, you can see that we've got a little bit of resistance at 12.46, 12.47, and although we spiked through there yesterday to 12.50, we couldn't hold it. So in effect, that is doing its job, and as I said, we've got these little highs from the end of November, beginning of December, around the 12.55, 12.53, 12.56 area. So anyway, you can see that 12.46 we've got to get through at least, then we've got to get through the 12.55 area, and then we can push on to 12.64, but I think, as I said when we looked at the daily chart, that's probably going to cap this week. It's really only a push through the 12.68 level where I then start to feel positive again. But I think if we run as far as 12.86, that's not only short-term Fibonacci resistance, but it's also trendline resistance, and I've got a feeling that'll be the end of it. This is just, as I said, a bounce in a bear trend at the moment, and no real reason to start getting bullish in gold. Okay, that's it for gold for the day. Thanks very much. I'm Jason Sen at daytradeideas.com.